And now let's cross over to Hong Kong now where Patrick Falk is joining me live. Hi there, Patrick. So Hong Kong shares staging quite a rally today. Tell us about the trading day.
Hi there. Yeah, that's right. Bear in mind the market sank to a 3.5-year low on Friday. So we were expecting a bit of a rebound, particularly after the gains made in the US and Europe at the end of last week. Energy and resources picks were among the top gainers today, with CNOOC up around 6.5%, while Sinopec added around 4.5%. I mentioned last week China Light and Power agreeing to purchase natural gas from CNOOC through a new pipeline connecting its Wenchang gas field in the South China Sea to existing lines, and that appears to be helping to lift oil shares, particularly after some of the big declines we've seen in that area of late. Financials outperformed, as you mentioned, the broader market as well, with Ping An Insurance Group adding 6.5% and China Life Insurance putting on around 5%. Supply chain manager Li Yinfeng was the only loser in Hong Kong today, shedding 1.3% after Goldman Sachs cut its price target at the end of last week to $5.30 from $5.70.
And Patrick, the wallet story for HSBC drawing to a conclusion of sorts as well today. What's the verdict?
Well, for now, anyway, HSBC's shut the door on this story, and no doubt you'll be getting more reactions out of London today as well. But Europe's biggest bank has decided to keep its headquarters in the UK following a lengthy review. There'd been talk of a new pivot to Asia strategy last year that entailed relocating the bank's nerve centre to Hong Kong, which came about amid concerns about stricter regulations and higher taxes, and the possibility, of course, of UK leaving the European Union. And people may indeed be looking to that today as a possible indication perhaps a so-called Brexit is unlikely to happen after all. HSBC said London remains one of the world's leading financial centres and that it was ideally positioned as the home base for the bank, but there was also concern about volatility in the Chinese market, which would potentially make any move to Hong Kong a risky decision for now.
That's definitely the case. And HSBC is not the only lender in the spotlight. There was a bit of a negative news surrounding Bank of East Asia today. Tell us more.
Yeah, the family-run lender rejected a call by activist investor Elliott Management Corp to put the bank up for sale, saying the challenging business environment wouldn't bode well for the move. Elliott owns around 7% of the bank, and earlier this month piled pressure on Bank of East Asia to sell, saying its executives had serially mismanaged the business, causing weak performance and poor returns for minority shareholders. Bank of East Asia has said, though, that it will carry out a strategic review of its share registered business Tricor Holdings Limited, of which it owns about 76%. Its share price not doing too badly today. It was up more than 3% at midday, although it did give up some of those gains in the afternoon to close 2% higher.
Thank you for the update. Patrick Falk live in Hong Kong for us.